Alright, so I don't think I'd be able to call myself a finance channel if I didn't address hashtag GameStonk. Hi guys, Irish Wealth here, welcome back to the channel. So unless you've been living under a rock, you've probably heard something about the whole GameStop stock absolutely rocketing in value over the last few days, up now around 923%, which is just absolutely ridiculous. So essentially how this all came about was a group of Reddit users realized that this stock was heavily shorted by just a load of institutional investors, hedge funds, basically short selling the stock, banking on it going down in value, and now retail investors have rallied and bought up a load of the shares, driving the stock price up. Now, if you're new to investing and don't really know what short selling is, I'm just going to give a quick little overview of what it actually means. So let's try and explain what short selling is. And essentially the objective of a short seller is to find a stock company that's basically going to go down in value. GameStop being a perfect example, a kind of Netflix blockbuster style scenario where, physical retail outlets, physical discs for video games are just not in demand anymore. The fundamentals of the business is not good for the next 5 to 10 years. So what the big hedge funds and short sellers realized was the potential for this stock to go down in value. So essentially what this short seller does is they'll borrow 10 shares from the broker. They'll then sell those shares at a certain price and hope that the stock price goes down. Then they will buy back those 10 shares for a discounted price as the stock price has gone down. They will then sell those shares back to the broker and they'll pocket the difference in profit. Now, what happens if the stock price goes up and continues to go up? Well, then that puts pressure on the short seller to buy at an inflated price, because as long as that price is going up, they're losing exponential amounts of money. And that's essentially what's happened with GameStop and, to a lesser extent, AMC. So while this is a beautiful sort of David versus Goliath type story where the little people, the retail investors, are sticking it to these multi-billion-dollar hedge fund managers, there's a lot of retail investors are going to get really hurt during this time period. So we can see here at one point it got up to $469 a share and completely crashed down to $145 a share. Now, a lot of people would have maybe bought in at this 469 thinking it's just going to keep going up, and then completely plummeted and probably sold off down here at 145, making ridiculous losses. So my advice to everyone would just be, don't FOMO into the market. Don't ever invest an amount of money that you're not okay with losing. Like if you were to set that money in front of yourself and light it on fire, that you literally wouldn't even care. But even then, I would never advocate, FOMOing into these kind of ridiculous trades. But it's definitely fun to watch on the sidelines and see how it unfolds. So anyway, guys, if you found this video helpful or entertaining, drop it a like and subscribe if you're new. Let me know, have you bought any GameStop or AMC shares, and how have you got on? Have you made any profit? So thanks for watching, guys. We'll see you later.